Recently, the world has shown great interest and engaged in extensive discussions about a new currency introduced by BRICS. Could this currency potentially surpass the US dollar? Let's analyze this. As you may know, China and Russia established the BRICS bloc to counteract the dominance of the US and the EU. Recently, they have introduced their own BRICS currency. So, why do BRICS countries feel the need to establish their own payment system? The desire for various nations to reduce their dependency on the US dollar is not new. Many countries have discussed dethroning the dollar since the 1960s, though no efforts have yielded significant results. To put it simply, the dollar currently accounts for 84.3% of cross-border trade, while China's yuan only represents 4.5%. Naturally, the BRICS currency was created with the mission of challenging the dollar, and it is predicted to have a stronger chance of success than previous competitors. Unlike earlier challengers, the new BRICS currency truly has the potential to either replace or, at the very least, destabilize the dollar's position. If BRICS members exclusively use their currency for international trade, they would eliminate a significant obstacle in their efforts to break free from dollar dominance. These efforts usually take the form of bilateral agreements that price trade in non-dollar currencies. For instance, the yuan is currently the primary currency in trade between China and Russia. However, one challenge is that Russia won't import all its goods from China. Therefore, after bilateral transactions, Russia often converts its profits into dollar-denominated assets to purchase imports from other countries still trading in dollars. However, if China and Russia exclusively use BRICS currency for international trade, Russia would no longer need to convert bilateral trade profits into dollar assets. Russia could use BRICS currency, not dollars, to buy imports from other countries, thus beginning a process of de-dollarization. Could it be realistic for BRICS countries to trade solely in BRICS currency? The answer is likely yes. Firstly, these countries are capable of self-sustaining their imports. In 2022, the BRICS bloc had a trade surplus, or current account surplus, of $387 billion, primarily from China. The BRICS bloc could potentially achieve self-sufficiency in international trade, a feat no other monetary union has accomplished. The BRICS monetary union differs from any previous alliances, since its member countries don't share borders, allowing it to produce a more diverse array of goods due to its geographical diversity. The BRICS monetary union could potentially achieve a level of self-sufficiency unseen in past unions, such as the Eurozone, which posted a $476 billion trade deficit in 2022. Furthermore, BRICS countries don't necessarily have to trade exclusively within their bloc, as each member wields substantial economic influence in their region. It's likely that many countries would be willing to trade in BRICS currency. For instance, if Thailand felt compelled to use BRICS currency to trade with China, or if Brazilian importers continued to buy Thai shrimp, Brazilian consumers could keep enjoying Thai shrimp on their menus. Products produced in BRICS nations could also circumvent trade restrictions by exporting and then re-exporting goods through third countries, as happens with new trade barriers like tariffs. In a worst-case scenario for BRICS consumers, their governments could impose trade terms that allow transactions only in BRICS currency, as Russia has done. The US and Europe have prioritized isolating Russia economically, but some American and European goods still flow into Russia. Though consumers face higher prices, they are not unmanageable. As BRICS leaders increasingly emphasize de-dollarization, with Russia's current experience as a testament to the maximum risks, the balance of risk and reward in de-dollarization becomes more enticing. For BRICS currency to replace the dollar as a reserve currency, it will need safe assets for reserve purposes outside trade. Is it realistic to expect BRICS to find such assets? The answer is yes. BRICS has a trade and current account surplus, so the BRICS currency need not attract foreign funds. BRICS governments could encourage households and companies to save in BRICS assets, while using policies and subsidies to effectively ensure the market's survival. Furthermore, BRICS assets may have unique qualities that make them unusually appealing to global investors. One major drawback of gold as an asset is that, while it diversifies risk, it doesn't yield interest. BRICS currency is expected to be backed by gold and intrinsically valuable metals, like rare earth metals. Interest-bearing BRICS assets would resemble interest-bearing gold, making them attractive to investors seeking bond returns, combined with gold-like diversification. Of course, for BRICS bonds to function as interest-bearing gold, they must be perceived as relatively low risk. Current government debt in these countries carries significant default risks, but these could be mitigated. BRICS bond issuers could reduce risk by shortening maturity periods, giving investors confidence that, for instance, the South African government would repay within 30 days rather than 30 years. Pricing could also offset investor risks, with market participants able to demand higher yields for BRICS assets if desired. BRICS governments would likely pay the price to ensure their currency's viability. In the end, BRICS currency will be mainly used for international trade rather than domestic circulation, adding complexity for central banks within BRICS countries. Establishing a supranational central bank, similar to the European Central Bank, would take time. These challenges are not insurmountable, but geopolitical tensions among BRICS members also present difficulties. However, a BRICS currency would signify cooperation in a clearly defined area where interests align. Nations like India and China may have conflicting security interests, but share a common goal of de-dollarization. They could collaborate for mutual benefit while competing with other nations. The BRICS currency is unlikely to dethrone the dollar, but it could significantly reduce its global territory. Even if BRICS fully de-dollarized, the majority of the world would still use the dollar, transforming the global monetary system into a multipolar structure. Many Americans often lament the dollar's declining global role, yet they may need to reconsider. The dollar's global role has always been a double-edged sword for the United States. While it enables the United States to enforce sanctions through foreign policy, it raises costs for American goods and services abroad, reducing exports and leading to job losses. The blade that once struck America's enemies is now cutting Americans sharper, while dulling against America's adversaries. One traditional benefit of the dollar's global role has been the United States' ability to use financial sanctions to advance its security interests. However, the 21st century's security challenges are increasingly shaped by competition with state actors like China and Russia. If this assumption holds, and if sanctions against Russia serve as valid evidence, sanctions may become an increasingly ineffective tool in United States security policy. Thank you for watching the video. If you found it meaningful, comment 1, and if not, comment 2, so we can improve in future videos. Goodbye and see you next time.